So today's call is just going to be a short one. I'll go through a bit of psychology, but as I said, I'm no expert, so I don't have much to say. And I'll just share what helped me and what helped others, what I've seen that help others. But except for that, it's gonna be nothing. It's just gonna be a talking session, and maybe at the end of the call, I will break down the last week. But there was no trade to break down really. So let's go. Yeah. So as I said, I'm not really a psychology expert or anything like that. Like the furthest my knowledge goes is few books and few sitting sessions with psychologists, psychiatrists. So this is basically me, and in 3 or 4 weeks we'll have this product here. So I will not really go deep into FOMO, revenge trading, and these specific topics. But if you were going to ask me in the end of the call, then I will answer. I'll tell you how to deal with such things. So it all comes down to decision making. And that's the whole psychology behind trading. Like you just want to make your decision making as clear as possible. You want to eliminate all the errors. And even when we emotional trade, we still make a decision, right? For example, when we revenge trade, should I take this trade or no? Even though we know that it's going to be a bad thing. Or even when we take legit trades, it's all about decision making. Again, is this trade valid? Does it have everything? Am I following the plan? And for good decision making, you need to get rid of external pressure, which I think is the most overlooked thing by all traders. We need a strict and easy to follow plan. I think this topic is really big to finish in one call. So if you guys want, we'll vote for it on Discord. But if you guys want, I can dedicate the next Zoom just for plan building, trading plan building, and we'll spend 1 hour just sitting and building a good trading plan that you guys can test in future. We need good mental state, so we'll talk about how to get to that, and loop of feedback and adjustment. So this is what I've been trying, and I hope I did provide you guys with during this learning. And so you guys learn concepts, you guys send the concepts, somehow log the concepts, log the chart somewhere, right? Took screenshots, save them, and send it to me. And then you got your feedback, and you could adjust and learn the concepts properly. But to learn trading, learning concepts is just one little part, right? Then you have to put everything together. So that's why we did backtest. That's why we also provided feedback on that, but it has to be constant. It cannot end. So you guys have to learn how to basically correct yourself later on and basically find your mistakes. So let's start with what's next. Yeah, find external pressure. So most of you have psychological problems because your life sucks, probably, in literal sense. You either have financial pressure, social pressure, or environmental pressure. And you know that trading is a really difficult job. It's a really demanding job, right? You have to be at peak state, peak mental state all the time. You have to be at peak physical state even to have a good mental state. So you can imagine it's like diffusing a bomb while your house is burning. Of course, no one could do that, right? You have to be locked in 100%, no side thoughts, nothing like that. So financial pressure, it's a reality check, but I think most people underestimate the effect of this, how much it can impact your trading. And oh shit, this was a GIF, but it's plata and plomo. Okay, plata or plomo. So basically, you being in debt is a no-no. My first advice I give to people, even if it's family or friends that want to trade, is my first question, is if they have money and if they have any financial problems. So being in debt is a suicide if you decide to trade with that, right? You're gonna wake up every day, you're gonna have FOMO, you're gonna think of ways to pay off the debt, and the fastest way, or the way that seems the fastest, is trading. So you guys have FOMO, you guys with forced trades, you guys will over risk. And that's not a good thing. Not having money, another thing. That's why teenagers as traders suck. And I really hate teaching teenagers trading. You should have some capital to start with, right? But if you have only 1,000 or 2,000 on your name, then it's a big problem also. This being desperate being in desperate need for money, same thing. If you want to provide for family, for, I don't know, your girlfriend, or you just want to get richer for some reason, then same thing. You will eventually force trades, and you will not trade properly. And not having an income is the last. And I think the first thing that you can do for your trading, if you don't have a job, even if it's a side income, it will help you tremendously, right? So unless you have, let's say, savings for 1 year or 6 months, then you should definitely do something part-time to make some money to pay for the bills, if you really have to pay for the bills. And having money will also help you basically detach from your accounts, from your trading accounts, from your trades. Like if I have 1,000 on my name and I'm about to burn my challenge that costs 500, then I think I'll not really be able to sleep at night, right? So get your life together somehow. From what I've also seen is business owners and more successful people are doing way better when it comes to trading compared to, let's say, teenagers or people from Africa or third world country, but it's not their fault. So yeah, make money, get richer. Oh yeah, this is the gift. Nice. Okay, social pressure. So this was mentioned in our Discord once. Being comparing yourself with your peers is a big problem. Seeing others win and feeling left behind is another problem. And having ego and self-doubt is another big problem. So let's first start with comparison. Trading is a lonely game. You should not really do it in groups. You shouldn't really be in any communities unless it's purely for learning. But at this stage of bootcamp, you are not learning anymore, right? You're just fixing your own problems and improving what you have, but you're not in the Discord to hope to learn something new. And if there is something that I, as a mentor or other mentors, want to say, it will be in the markups. It will be in the breakdown videos, right? But there's a reason why I don't go into the Euro USD chat and I don't tell you that I'm bullish or bearish, because this can affect you. And I also don't send winning trades during the day, right? You notice that I send them when the day is done, basically. So people don't see me winning a trade in the middle of the session. And that's where all the problem comes from. If you keep comparing yourself with your peers, it's never a fair game. Either you are ahead or they are ahead. They can have more money, they can be smarter, more talented, they can trade for longer. They could have spent, like me, I spent over 50K, almost 100K on courses alone. Like the content that I consumed in the first year, you cannot compare yourself in your first year with me, for example, right? And again, if you compare yourself with others and you're better, you'll have ego. With good ego, big ego, you'll probably not accept losses. You'll think that you're too good, but nobody's really too good in trading. And if you're worse than me or any other peers, or if you see other people winning, then it will create self-doubt. So what this will cause in future is hesitation, right? For example, when you execute a trade, then it can get in your subconscious mind that you're worse than others. Also, comparing yourself can make you feel left behind, and that will cause FOMO. You will want to trade more to catch up. For example, you're not funded and some guys already funded with 200K. If you compare yourself with them, let's say you'll say to yourself that you're the same age and you feel left behind, then I think you will start forcing trades just to pass your account. So no, this shouldn't even exist. You should only compare yourself with yourself. Last common problem is environmental pressure. So one of our best traders, Martias, has this problem, for example, has loud household, or you can be in school where peers will make fun of you, or teachers are negative, or you're really surrounded by negative people, let's say. So of course, this will create such burden on your mental that you'll not be able to trade properly. Same with loud household, right? You have too much distractions if you have a baby jumping on your bed every day. Negative people can be also family. If you have parents, negative girlfriend, or something like that, then you should get rid of them. Either either kick them out or move away. But you should not work in that environment. Aggressive girlfriend or aggressive people is the same, but this is a problem I personally had. For example, I'm doing really well, but let's say on a good day, my girlfriend will get aggressive with me, or she'll get angry with me for some reason. Then just this little thing can cause so much problems, right? Like I'll be more emotional than normal. I'll be more irritated than normally, and this will eventually lead to emotional trading. So what I did, I got an office. And office is not that expensive. You can rent one for 100, 200 max. So too much comfort, And this is a funny one. I have never seen anything like this until I went to one Zoom call with one guy. But the problem he had was that he couldn't take trading seriously, right? Or he couldn't focus for too long because he was sitting here. He had his PC and his bed. And he had his bed next to him, right next to him. And his problem was that he just got too horny because his bed was so close to him. So it took 2 steps for him to get in bed, I don't know, and watch some porn or some shit, right? So you need a professional space. You need to take this professionally. Don't trade from, I mean, if you don't really have a choice, trading from bedroom is not bad, but do what you can to not make the space too comfy. It's a job, it's a work. It's a profession. And all these things will lead to impulsive decisions, right? So anything that will elevate your emotional state will lead to impulsive decisions. Now, that's all regarding the external problems, but I personally think the biggest problem is people not having money. And people should not trade if they don't have money. But take it as you want to, take it as you want. You can trade even if you don't have money, you can do whatever you want. But my suggestion is, if you don't have money or problem with money, you should find a normal way to get money first. Maybe work more jobs, work part-time, rethink your career, do some side hustle. It's not that hard to make another 500 or 1K a month. It's really not hard. So now we'll get to reality checks, some mindset things. These things cannot change in one day. I'll just tell you how I really and genuinely view the market and what my real mindset is, and it should be like this subconsciously. So everyone really treats it as a game, and even your mentor might have told you that you should take trading as a game, but the moment you don't take it seriously, it's the end. So really, take it seriously. It's a job, and it's a profession, right? So don't take it as a game, just take it seriously. Some people try to catch every move and flex, but again, this would mean that those people are trading for self-validation, right? So if you have some ego problems, you should fix them first, become a better person, and then start trading. But if you have some complex, if you're insecure, I don't know, you didn't do well at school, or people called you dumb the whole life, then I would try to fix that problem outside of trading and then go into trading, right? So be self-aware. And yeah, as I said, this is a job, not so you want to be professional. And now regarding trades and every single trade, every time you take a trade, or every time I take a trade, this is really what's going through my mind. I mean, I don't really actively think about this anymore, but this is my subconscious mind. So when I enter a trade, for example, when normal people enter a trade, they really hope for a good outcome, right? I hope this is gonna hit TP. I hope it doesn't hit stop loss. I hope, I will not get in drawdown, further in drawdown. But you shouldn't hope for anything. Anything can happen. It's not really healthy to view trading as gambling, but when it comes to execution and when you're executing, it's really better for you to approach it as gambling. Not hoping for a red and black, but in a way that you cannot really change the outcome of anything. A trade can seem better, right? The trade can have, I don't know, 10 confluences, but it doesn't guarantee anything, and it doesn't improve the probability of the trade. So anything can happen. You're throwing a dice. Loss streaks are inevitable, and this is true. This is harsh reality, right? No matter how good you are, no matter how good your stats are, your statistics are, or how disciplined you are, or how many trades you take, or how often you take them, you will eventually get a loss streak, and it's gonna be more often than you'd like to. I personally would say that I do have a loss streak every month. Let's say 4 losses in a row. I'm sure I have 4 losses in a row every month, every single month. And I don't think I've seen anyone in my life, even profitable traders, who have never had, 7, 8, even 10 loss streaks, even the best traders ever. It will eventually happen. It's statistically guaranteed. Okay, so don't take loss streaks too personal. Every time that happens, and you really take it personally, and you feel like it's really affecting your mental, then it probably means that you did not finish one out of the 4 things. And most often it is not trusting your edge enough, right? And why don't people trust their edge enough? They don't backtest enough, they don't have enough data, or they basically don't know what they're doing. Random outcomes. So this is the most important thing, and I think this it is the most important thing to me, is realizing that the result of the current trade is not affected by the previous trades. And this is called gambler's fallacy. So basically, if people have, okay, imagine this is a loss, 5 losses, they will usually over-risk on the 6th trade, right? The more trades you take statistically, the closer you are to the winning trade. Yes, you're closer to the winning trades. That's supposed to be somewhere in future, but it does not increase the probability of your next trade. So even if you lost 10 trades in a row, you should not increase your risk on the 11th one, because the 11th one is the same as the previous ones. It has the same probabilities. Same with winning trades. If you win too many trades, it also does not mean that the next trade will be a losing trade. It does mean statistically that the losing trade is closer, but the next trade and the probability of the next trade is, again, the same as previous ones. So you should not decrease your risk. You should not avoid a trade. You should not do anything. You should just continue. You should just continue with executing your strategy. The market should not react or should react. So every time you're trading and you are saying that market should do something, you're planting a really bad seed in your mind, in your subconscious mind, because the market shouldn't do anything. And that is one of the biggest problems with our trading strategy, right? Because we basically claim that we do understand the market. Okay, this can work in the theoretical part where we study the market, where we do markups, where we develop our edge or concepts. But when we come to live trading, you should drop that idea that you understand the market, because nobody really does, right? So from the moment you go live trading, you should just, go back to the anything can happen mindset. And the market shouldn't do anything. So when you mark a trap, the price shouldn't, take the trap. I mean, it probably will, but it should not, right? It doesn't have to. It doesn't have to do anything. It can swing sell from a trap, or from the thing we mark as a trap. It can be turned into a POI. Or like last week, we saw price selling from a week high, right? We had a PDC like this. And most of you would say price should take this out. Yeah, it will eventually, or it might eventually, but it does not mean that it has to happen, right? And everyone was buying for no reason. So yeah, the market doesn't owe you anything. The market doesn't give a fuck about you. The following trade is independent of the previous one. So this is the same as the random outcomes, but also this is regarding revenge trading. If you are in a trade, let's say you really have bullish bias, you have Asia low, you have an RBOS here, and you get into a trade and it fails, and you should take another one, that another trade should be a complete trade also, right? We should not take a trade because the previous one was also a buy and our whole bias is a buy. You have to do your whole analysis from beginning, but you shouldn't keep the old bias and old analysis for the next trade. And most importantly, not trading is also a valid trade. People are really scared of the idea of not trading, but I think not trading is a blessing. You have the most peaceful time of your lives when you don't trade. And that's, for example, in the last 2 weeks, right after Christmas until now, we did not really have any trade. And that's why there wasn't any price breakdown, but there was not any good trades. I'll show you later on why. But imagine, I mean, at least those who lost, imagine you did not trade during the holidays times and during the first week of January, and first and second, and see if it would really be better to not trade at all these days, rather than hitting a loss streak for no reason. So this is also one of the biggest problems right now. And this is what majority of traders struggle with. And that is they put all their emotions in one trade, right? So for example, in drawdown, they hope that this trade will get them out of the drawdown, or it will get them closer to break-even point, or this trade cannot lose, it has so many confluences, or this trade must work. But again, if you really want to take trading seriously, and you should, you should realize that that one trade is just one out of thousands of trades that you're going to take. And that one trade, even if you lose 5% on this trade, it will not really affect your trading long-term that much, right? So treat all the trades the same. Treat it as just another sample, just another test. And this is how you should approach it. This is what should be your thoughts while you trade. For example, when I enter a trade, every time, this is a bit lame. I don't know if the doctor is going to agree with me in 3 weeks, but it really helped me. And I basically plan what I'll do in every outcome. Basically, if I hit a TP, I'll do this. If I hit a stop loss, I'll do this. And most of the time, if this trade doesn't play out, it's okay, right? I'll just look for a better trade, or I already have a plan B. So when you enter a trade, what helps me the most is knowing if there would be another good trade in near future. For example, you have equal highs. You just look at equal highs, and you just took Asia. Okay, so the rule for equal highs is what? We should trade it with a double sweep or an RBOS, right? But in this case, since we have Asia, we already have an RBOS, even though it's our first sweep. So what does it mean? The moment I get an RBOS, I can get in, but if the RBOS fails, I'll have a double sweep. So when I enter this trade, I'm fully aware of the fact that if I lose, I will have a plan B soon. I'll have a second trade soon, and I already know what entry model I'll use, what I'm waiting for exactly, right? I would wait for, let's say, H1 bearish candle here. But for example, if you have a reversal trade, not a double sweep, not equal highs, but let's say we have price behavior like this. Let's say it's completely out of timing. So we have an FBOS inducement. We have a bearish candle here. It fails here, so we get a stop loss. And then it does this, then you know that in far future, you're not going to have a trade, right? Or let's say after this level, let's say this is an extreme, price takes out the high time frame structure. So what does it mean? It means that we don't trade. And it means that when I execute this trade and I imagine the outcomes, the wins or losses, the win or the loss, I already know that if I lose this trade, there's nothing to really do in the next few hours. So I don't even have to monitor the chart, right? And that's an example of how you can prepare yourself for revenge trading and emotional trading like that. And again, I must focus on following the plan. Same thing, you're getting your ego out of the way. You're here to execute your plan that you've been working on for weeks or months or even years. In my case, it took me 4 years to build the current trading plan. This is what the short-term traders see. This is what the long-term traders see. This is my trading history from some random week. I don't know. But for example, if you see this, if you just execute a trade and you see, like -1,1600, then it's really tough to eat. The pill is really tough to eat. But you have to realize that this 1600 is just one out of many trades. And these many trades is what really matters, right? It's just a number. It's just one out of hundreds of trades. It will not really affect you that much. You'll not burn your account unless you have a really generational losing streak. And if you look properly, right after losing this, and I even had 2 small losses, let's just say it's 2000, I eventually got a proper win that made 6 times more back, right? So this shouldn't affect you. But if you let this affect you, you might make more mistakes, you might lose more, or you might hesitate on the trade that's finally winning, right? And then you'll end up without this win for no reason. So the mission for you is to execute every single trade that happened here, right? You don't want to gamble. You don't want to miss one of the trades and hope that it's the biggest win. Some people try to avoid trades to avoid losses, but by doing this, you also ruin your edge for no reason. Same thing with this one. This was one trade. I split the trade into 3, but I don't know, it's what, -4,800. I lost 1K with commission. So I lost 1K. So it's the trade here. It's the continuation of the history. And same thing. I lost 1K, then I got some partials probably, I don't know. And then I hit a win that made 12 times, sorry, this one trade. So it is 12K. So I basically made 12 times more back, right? But again, if I let the first loss affect me and I didn't try to execute every single valid trade that I could have, I might have dodged the winning one. And then I would have our generational losing streak, right? So if your trading plan is really foolproof and you know what you're doing exactly, and you don't have, let's say, less or more probable trades, then you should just stick to it and execute every single trade, even if you think that you're going to lose the trade. So trading plan. This is not something I'm going to go through in this call because it really takes a lot of time. But the one I showed you was the core of my trading plan. So if you remember, I showed you something like bias levels, right? And then entry model. If you want to build your own trading plan, you can use that one. But all you have to do is work on every single aspect of that trading plan. So bias, right? For now, we only have targets, we have levels that we trade, and things like that. But for example, what the trading plan doesn't mention is market conditions. How do we make bias in this and that condition, right? So you have A, B, C, and for every condition, you should have your decision-making process. When you finally finish bias, you can improve levels. So for now, we only have liquidity levels, we have rebalance levels, high time frame levels. But what if you have two levels at once, right? What do you do then? What do you do if the level sucks? Or what do you do if the rebalance doesn't have liquidity? And you need a concrete solution to every of those questions. The reason why I'm the only one who does these Zoom calls and not Ray or Emmanuel, for example, is because I'm the only one who actually master their trading plan, right? For example, if you ask me a random question, from a price action from 2022, I will actually give you a solution or an answer, or what I would do, a concrete solution to that question, to that problem, right? Like I have an answer to every single market scenario that happened, and this is just through backtesting. Same with entries. So this is a trading plan from one of our members. It does look complicated. It does look like a big trading plan, but from what I see, this whole thing is just an entry part. This is just like 10% of a trading plan. It should be 10 times bigger than this, And when you execute a trade, you should basically be able to go from here, okay, I have liquidity, okay, this type of liquidity, okay, the timing is this, so I should do this, then I should do this, and then I should do this, and then you just follow it in the live market, and you just do that, right, without any second thought. Of course, it does some components like bias require some thinking, but that's really a small part of trading when you come to this level. For example, some would say that my trading plan is subjective, which it is. It has to be subjective to some extent to not be fragile. But when I execute it, I don't really think much. One of the most important part of the trading plan that I never mentioned, and I think I forgot to mention, and now I see why it's so important, is things that you should not do. Not to do. And this comes from your live trades, from your journals, from backtest, and you basically go through all your losses and you try to figure out what they have in common the most, like what to really avoid, right? For example, some people trade Asia. Okay, look back at your last 50 trades in Asia. Was it even profitable? No, then you don't trade Asia. Okay, some people trade after key boss, like last week. And I explicitly said many times, do not trade against the key boss, even if the bias is against it, right? So in this case, we are bearish, but I mean, oh, okay, I'll draw last week. So in the last week scenario, we were basically reacting to a trap, right? But it just got a key boss. So what does it mean? It means that the price will probably go a bit further and then it will go up, right? But some people don't have this part in their saved in their brain. It's not really solid, or maybe you heard me saying that once or twice and you think it's not important. Same thing. You have to test it and figure it out. But for example, not trading key boss is one of the things that improve my trading too, right? Sometimes it does go the right way, but it's not worth risking it. So you can avoid all the losses that happen inside here. One of the more, one more thing to not do is, again, trading after breaking structure. Same thing. You should add all these things in your trading plan. But again, if you guys want, we can build one from scratch next call. And now this is the last part of the psychology, and it is before, during, and after session. I didn't prepare much for this presentation, but I'll talk a lot. So pre-market routine. It depends on where you are, but I believe most of the people here are from Europe or the US, which means that we all trade in the morning, right? So for unemployed people, the worst thing you can do in the morning is wake up, open your eyes, and look at charts. You should have some time window between your trading and your wake up time. So what's good for this? Wait, let me check. Where is it? Before. Oh yeah, okay. Well, either you have some daily report card or some journal template. So what I do is I have a template, but what other people like to do is they have a card. That's fine. And you basically have some basic questions to ask yourself before you go to trade. But even before that, you should do some cardio, or you should move a bit. Like, treat trading as a professional sport, right? You always want to be in your peak mind, peak mental state, peak physical state. So what you can do is, before you trade, eat something light, eat some light carbs. It will help you with thinking. You should do some cardio, some light cardio, let's say a walk, not really running. I don't think that's a good idea, but a walk is good to increase blood flow. And then all your blood goes to your brain, and then you can think properly. And after that, you do your questions. So many people in this society are not really aware of themselves, whether it is mentally or physically, but just try to sit. I'm not telling you to meditate or anything that crazy. It's not necessary. It's good. But just sit for a minute and see how you're feeling. Maybe you didn't sleep well enough. Maybe you have a headache, or I don't know, for some reason you feel FOMO, or the urge to open a trade, or you're excited to open a trade. Like, all these things, all these symptoms can ruin your trading day, right? Do you drink coffee in the morning? Coffee is fine. Okay. So this is the most basic part. I'll show you what Ray uses, and I'll also show you what I do before trading. But I don't do a pre-market routine. I do a pre-trade routine. So I'll get to that now. This is how I journal my trades, live journal my trades. And this is during a session. So during the session, again, meditation is good, but it's not it's not that important. But I'll try to explain the core concepts of meditation to you for those who are ignorant in this topic. So meditation is not just sitting and not doing anything or not thinking, right? The goal of meditation for many people is reaching mindfulness, which is basically being present in a moment, being aware of everything that's happening about you, but not judging, not thinking about much things. And another level to that is metacognition. So as you see here, this is literally metacognition. You're basically watching your own thoughts and how you think. And it's even scientifically proven that it increases your chance in success in everything you do if you can do this. So before you trade, you want to somehow pay attention. Just sit down and listen to your thoughts, what you're thinking, like what kind of stupid thoughts you have, right? Some people really want to take that trade, but they never realize that because they never take their time to even pay attention to how they feel or what they think. So this is what I do. This is the pre-trade routine that I do. So basically, before this, I have one more line here that for which I write how I feel for the day. So at the end of the day, let's say after many days, you can come to a conclusion that with bad sleep you have losing days, or on every bad sleep day you lost, or it can be even affected by the previous day. You could have lost a few percent the previous day, and then the next day, and then the pressure, the negative emotions roll over to the next day, which can also happen, and it's pretty common, right? Emotions can pile up, and it can even be long term. If someone loses for 2-3 years and they're just losing money for this for such a long period, then all the bad emotions will accumulate, and your body will be in a constant stressed state. So try to be aware of how you feel. So for example, this day I had a really nasty buy. It was like 1 to 8. So let's see what I wrote. Mentally looks like a decent trade, and this is more technical. This is how I feel when I look at a trade non-technically, right? Feeling proud. If this trade hits a stop loss, I want the price to develop more. So this is what I mean when I say I have a plan before taking a trade, right? If I lose this one, I already know what I'm gonna do. I'm not gonna do anything. It's gonna consolidate probably. No stress. This day I didn't feel any stress. A bit excited, yeah. And of course, even today I'm improving. Then you have the technical part. So again, this is also important because at the end of the day, you can watch how much your emotions affected your technicals, right? If I feel like I'm in FOMO, or I don't know, if I still feel stupid after losing yesterday, then it can affect my technical side. Or let's say if I lost a bias today, I could have had a fixed bias the next day, so today, right? So the only way to see it objectively is at the end of the day, when everything is done, when the trade outcome is done, you can look back and you can see if your trade analysis, let's say, matched mine when I post a market breakdown. So I hope this is really clear, and we can go to the next section. After a trading session, stop hunt as entry model. Do you mean continuation of both or candle that wicked the previous candle? Candle that wicked the previous candle. I cannot really see it here, but it was a bullish candle, and then you had another bullish candle that wicked out the previous one. Yeah. Okay, so after a trading session, you should do a technical and mental journal again. The mental journal is the only thing and is the best thing you can do for yourself when you already have a strategy, have a trading plan, and no external pressure. This is the only thing that you can do to improve from that point if you have psychological problems. And as I said, this is not only after, but mental journal should be before a trade, during the trade, and after the trade. Okay, how you feel before, how you feel during. I don't really have problems with holding trades and things like that, so I don't journal my during process, but you should if you have any of those problems. So you should identify your problems and then act accordingly. One interesting thing that I learned from my favorite book from trading psychology is tracking your thoughts. And personally, what I've seen on myself is that sometimes I really have specific thought patterns. And I think even if you hire a psychologist or someone who will track your trading, then they will do the same. They will have you write every single thought that you have, like just spell it out, not just, I'm feeling this and that, but like really write word by word what you're thinking. And then you will see what happened after those thoughts. Like these thoughts are basically a warning, a trigger to your decision making. So for example, I don't know, like the moment, okay, wait, let me think. It's really far in the past. But for example, when I wake up and I go to trade and I have this specific thought that I will kill it today or I'll destroy the market today, it really ended bad if, for example, I hit a stop loss as my first trade during the day. So that's an example. Yeah, every time I woke up and I thought I'm gonna win that day, it really stuck with me. The thought really stuck with me subconsciously. And every time I lost, I couldn't accept it compared to normal days where I was ready to accept any outcome or I didn't have any expectations. When you check your journal or when you evaluate your day or your week, you should definitely not judge the trades based on the results. So what I mean by this is a winning trade does not equal a good trade, and a losing trade does not equal a bad trade, right? A winning trade can be bad and a losing trade can be good. Why does this matter? Because if you evaluate this based on results, you will eventually deviate from your trading plan, right? You will make changes to your trading plan before you even realize that. So the only thing you should evaluate is this trade valid or is it not valid, right? And if a win is a revenge trade, then there's nothing to celebrate. You're going backwards. You're just getting lucky one time, but if you do this more times, you'll lose everything. Okay, let me check my notes. Awareness. Yeah. And yeah, this is the same thing. So nothing. Yeah. And at the end of the day, don't let your trades affect the rest of the day. So I'm saying this for your close ones, your family or friends, or I don't know. But don't let the trade become your identity for the day. So everyone struggles with this. Even me, when I have a big losing day, I'm angry or more irritated. But we should just move on. Hopefully, go for a walk, do something really distracting, and basically you want to let go of the emotions so it doesn't affect your next day. One thing I forgot was, how do I go backwards? Oh yeah, one thing I forgot to talk about is what to do during the trading session. So many people take this as a joke, like they'll say that they're gooning, masturbating, I don't know. But it really does affect your trading in the worst way possible. So what do you want to do when you trade? Well, First of all, of course, be aware, but you don't want to sit and think about how you trade for 8 hours, right? Or you don't want to sit and meditate for 8 hours. That's nonsense. So usually you should do something that does not spike dopamine. You don't want some high or cheap dopamine activities like playing games, brain rotting, scrolling. What's masturbating? Yeah, that's one thing too. Eating junk food while trading is also such a bad thing to do. If you want to eat junk food, you should do it after trading, after a training session for dinner, right? But you should not do any of those things. Also, no big distractions. So watching a movie is definitely a no-no. Watching series while trading is also not a good thing. Just don't do anything that will really take 100% of your attention. For example, listening to a podcast doesn't take 100% of your attention, right? You just sit, there's something playing in the background, and I don't know, you do something else. That's fine. Or even watching a podcast that you can pause anytime. But if you watch a series or something, or a movie, action movie, of course, it's hard to stop it. And and it puts you in such ugly emotional states that you don't want to trade during that. Same with video games. You can play games if the games are chill. I don't know, Minecraft is chill for me. Playing chess is chill too. But even playing Roblox is chill, like bullshit things like this, right? Or you can do like completely boring activities, reading books, Backtesting is one of the best things to do if you don't want an emotional trade, and that's it. But don't play games like League of Legends or Valorant or CS:GO while trading, because something can happen in those games at a time when you have to trade that will really make you mad or emotional. But I hope this is all regarding the psychology part of trading. I hope I didn't forget anything. For FOMO, revenge trading, and things like that, as I said, it will be explained by the doctor. Hopefully, I'm still negotiating with him. But if it all goes well, then we'll have it in three weeks. Okay, questions. How long do videos? Okay. Is it the same whether? What? Okay, I don't understand this question. See when we are already in the trade for it to play out. Oh, okay. So the question is, does it matter, or is it the same if we are in a trade or not in a trade? So of course, these these things are to prevent bad emotions while or before executing a trade, meaning it is mainly before executing a trade, right? You don't want to be emotional during that. And whether you do this during the trade or not depends on your data. If from your backtesting you saw that you do have multiple trades a day, or that there is a really short time window between those trades, so this is trade 1, this is trade 2, then of course you have to be in a best state, right, during the trade until the end of the call. I mean, until the end of the trade, because the next trade is coming soon, whether it is a win or a loss. But if from your backtest you saw that the average period of the trades are 12 hours to 36 hours, then who cares what you're gonna do during the trade, as long as you don't act on it, right? You can watch porn while while holding the trade. You can go out, you can, I don't know, man, go to a casino. Who cares? It doesn't affect you. So if someone is curious and someone is taking this seriously, after this call, you can go to the previous backtesting sessions, go to the January until May until June, and you can check the average period. So you just make an Excel and you write, okay, the pause between trade number 1 and number 2 was, I don't know, 4 hours. Then it was 20 hours. Then it was 30 hours. Then it was 2 hours. And then just count the average. Notice what's the shortest period, like what can happen. Notice what you do with re-entering, right? From the backtest, I saw that so many people, not a single one person, was re-entering, or not many people really re-entered a trade after hitting a loss. But when I see people live trading now, I see so many people re-entering after a loss. So whether you backtested wrong, so in that case, you build your strategy wrong, or you're executing your strategy wrong in the lifetime, right? So you have to identify like what do you want to do? Do you want to re-enter or not? And yeah, okay. What is the next question? In the next call, will you talk about risk management as part of a trading plan, like max losses per day, max wins per day? Okay, that's interesting. How often do you feel like journal? I really like the idea for this next session, bringing together a plan. Okay, then that's it. Next, in the next call, we'll bring together a plan. Okay. Okay, how often do you review your journal? What is the process of this review? Okay, if you guys want, and one of you want to give me your journal, you can give it to me, and I'll show you how to analyze a journal. But basically, what you do when you review a journal, when it's the technical part, is oh yeah. So what you do when you review the technical part is you already have your plan split into multiple disciplines, into multiple compartments. So that's why you have bias levels, and you can even split it more. The reason why we do this is not only to make the decision making smoother, right? Like you do one by one, you make one decision, go to the next one, make another, until you end up with an execution. But it's also gonna help you find your weakness. So it also depends on what level you are at, but where you are right now, I would say like what I would focus on the most is these three things: whether an entry model was wrong, a level was bad, or a bias was wrong, right? And from what I've seen, like from the losses, okay, we can even check the losses from last week on Discord, but from the losses, I see that bias is wrong and entry model. So sometimes you take, let's say, a candle close or a liquidity sweep, rejection candle trade. So you want to split your journal into multiple parts. This is really serious. The one that I'm showing you. So this is my backtesting journal. Okay, I'll show you how my backtesting journal looks. But this is the most complicated you can make it look, right? So this is what you do when you want to work on everything at once. So for example, when you're more advanced, you basically don't make repeatable mistakes. You make random mistakes. So one day you trade on the wrong time at the wrong time, one day you enter too early, one day you have wrong bias. Like it's not mistakes that are reoccurring, right? But in your cases, what you guys have problems with is wrong bias. Then you should just work on bias, but it's not like you're making 100 different mistakes. It's just one or two big problems, right? So what I do, this is how data collecting should look. I don't really use Notion or Excel anymore, but this is my old Notion, so I'll just show you how I do it. Before that, I was also collecting data on days, right? Like Tuesday, Monday, Friday. So at the end of the day, I can do Control F and I can write Tuesday, right? So there's not too many trades, but I write Tuesday. So all these trades are Tuesday, and then I'll see the outcome of the trades. Valid setup. So many, you can check the date. Okay, so every Tuesday there's a trade and the result of the trade. Wait, sorry, where is it? Oh yeah, here. So final RR 1 to 20, 1 to 10, 1 to 10, 1 to 20, 1 to 6. Like, yeah, so I can also see win ratio of every single day. That's why Excel is better, right? I can do Monday, same thing. I can do London session, London, and London, yeah, or London close, and I'll have all trades for London close for the year, for example. And then I can just review every single one of them. Then I have result, win loss. It's not that important, but you can just do this. Oh, okay, then I cannot do that. I can just do this then. I can search all the losses and then I'll just go through them one by one, right? So I don't know. Let's see. What's this? Yeah. Whoa, what? Oh yeah, so for example, I see a loss like this. So what's causing this loss? Oh, maybe I'm targeting a trap, right? So I'll write it there. And eventually, oh wait, oh, you don't see it. Sorry, my bad. You don't see my, okay, yeah. So this is the trade. But for example, wait, I'll open more losses. Oh, this is the same one. Okay. Let's try this one. Loss. Okay, this one too. This one too. Yeah, okay. So you have, let's say, 50 losses like this. And for every loss, you make a note. You basically want to find out what's the problem, like what's the problem with these losses, right? So for example, this one was winning, it was doing pretty well. But what was the problem was that it tapped into a trap, like we are inside a big trap right here. So, okay, this happened. Okay, I'll go to the next trade. What happened with this loss? I don't really know, but I'm just gonna assume again that we're inside a big trap and we are trying to buy away from a trap. Okay, now we have two different kind of losses. Now I'll have another loss, and this loss is probably a continuation with not enough liquidity. Okay, and then you'll continue, and eventually you'll come to a conclusion that many trades happen, many losses happen because of this reason, because we are trying to target the whole trap. And for this reason, also I stopped targeting the whole trap and I started closing 80%, 90% when we reach the trap, right? So for example, when I buy here, reach the trap, right? So for example, when I buy here, unless it's a swing trade, I will usually just, target this one, target where the trap begins, or where the refined trap begins. And you make the change, you go back to the journal, you check all your trades, and you'll see how many losses just this little change in the trading plan could change. But it's a really long and painful process, so we can dedicate next call for it. Yeah, I'll go back to Notion. What's the most important and what I hope everyone learned, at least during this mentorship, is to take proper screenshots. If one screenshot is not enough, you can make 2 screenshots, but you should be able to depict your trade solely from the charts, from this. Like, you don't want to have ugly screenshots and then have trading view and Forex Replay open and scrolling through the dates from beginning, right? If you backtest the dates, you should not have any reason to go back to that day anymore. You should have it all saved here. Entry model, same thing. If, for example, your entry model is flawed, you'll only find out by logging in many entry models. For example, now I'll say OB rejection, which was my old entry model, and I'll see these are only OB rejections, and the win rate is fine, right? But eventually, let's say you'll do price behavior, and you'll realize that this entry model loses the most. And again, if you have 5 entry models, and one of them is not profitable, you'll never find out unless you really filter them out and check them one by one. Setup is the same. Some people suck at continuations, some people suck at reversals. So I don't have this part written here, but you can also work on that if you want to figure out what's the best for you. And again, just by journaling, I realized that I suck at continuations. So I don't trade continuations that much anymore. Refinement is the smallest thing. It's not even important, like you don't need it. But here, like, the whole point of this was to see like how often I miss the trade or how often I get tagged. So you can test, for example, only 50% refinement and then do it on all trades and see how many times you would miss the trade. Trading context, maybe there's some confluence that does increase the win ratio of your trades. If that's the case, then that's perfect. Limit and execution. So you'll see if I see that majority of my trades is limits, then I'll just use limits. No need for using anything else. RR, again, some people really suck at targeting. You can do fixed RR, you can count average RR, minimum, maximum RR, risk to reward, risk per trade, and you can even do max losses and max wins. If you see that at some point of time in history you would have gotten 15 loss streak, which I think could happen eventually to anyone. But if you see it, you'll be prepared for it and you'll not panic when you're in a loss streak. So that's also what helped me. One thing, or my main reason why I started this journal a few years ago was FOMO, because I was really impatient and I didn't know when the next trade is coming. So again, if you're curious, you can go back to your backtest and journal, and you can check every single trade, at what time it happened and what day, and what's the time difference between them. And you'll eventually come to a conclusion that there's going to be a trade eventually, right? Maybe in the worst case, you'll wait 10 days or 7 days. In the best case, you'll wait 2 hours. Average duration, average period of waiting is 8 hours or 16 hours, including Asia. If you see that, you'll be more chill when you wait. After Feb, we stay in Discord. Yes. Oh, Amir Ben. Yes. After February, if you stay in Discord, you'll still have bootcamp videos. You'll have one breakdown per week. You'll have one Zoom per week, like right now in the bootcamp. So it's basically the long thing. Okay. Talk about data collection. Okay. But this is just the surface of data collection. It should be way more focused on separate topics. So let's answer some last questions. Does the end of days analysis, should the end of day analysis look like the backtest journal? Yes. So when you journal at the end of the day or at the beginning of the day, as I showed you before, it should look exactly like the backtest journal. Okay, even above this, I have high time frame and medium time frame too. It's not like I didn't do it. Okay. Regarding risk management for prop firms, do you think it's better to go with 105 to change it when phase 2, phase 1 account? Oh, okay. So last question is this one. Oh, sorry. Should I move it here? Okay. The risk management depends on how much money you have. Okay, you can risk as much as you want, as much as it doesn't affect you. If you have money and 1% risk feels painful, like you really feel something when you risk 1%, then you should risk less. And if you feel too little, if you risk too little and you don't feel anything, you should. Can you share template you're using in Discord? Yeah, okay. So it's the risk management is completely individual. Can you share the template using Discord? I don't have anything, bro. I just open a server. I write day of the I write the date, and then I just write everything I do that day, and it's all in one place. I don't want to show you my journal because it's ugly now. Okay, wait, let me check this day. Yeah, it's definitely not worth a try. Notion template. Okay. Okay, after this call, if someone has a good Notion template, then you can send it in the Discord. Now, for the final part of the day, this is what Reynoso Facundo uses. So my beloved partner. Oh, whoa. Oh, okay, it's bugging. Oh, bro. Oh, yeah, for some reason my Zoom is bugging. Oh, yeah. Yeah, I don't think Zoom wants us to have a Zoom. Okay. Oh, it's responding. What is that? That was my phone.